Good evening, everyone, and welcome to today's webinar, Price Movements and Trends of Financial Markets in Second Half of 2017. So today we will cover some possible aspects of price movement in I will talk about euro dollar, euro GBP, pound dollar, and of course something that we should expect very soon, my coverage, Chris coverage, and of course possibly trading and analysis. It's very possible, and that will be cryptocurrencies versus dollar. So that is a trend that we should not neglect. And at this point, we can see that a lot of price movements and trends are really respected. And especially if you traded today's setup on dollar yen, you could have made some nice pips regarding counter trend. And that is what I will show you just a little bit later. So before we begin, this is me and this is Chris, and we are your hosts. Before we start, CFD and Forex trading are leveraged products, can result in losses that exceed your deposits. And this presentation and the video is for informational and educational purposes only. And this video is not part of the .co.uk website, but the globalnews.com website. So please read the full risk disclosure on this web address. And if you agree, please proceed further with us. So my part will be Forex and cryptocurrencies, something that is very interesting to trade. And I said it in my latest interview with Forex Street, something that also it has a trend and something that we should not neglect because it might be the present and the future also of currencies. Of course, Forex will be here and some other markets we will add such as Ethereum, Bitcoin, Litecoin, and Ripple. Okay, so before we begin, we need to start with the most popular Forex pair. I mean, most popular for some traders. For me, it's okay, but I don't like euro dollar that much as I like it like 10 years ago. But, well, from time to time, it surprises me. For example, yesterday when it dropped from the POC and then spiked again from another POC. So it was really exciting. At least I got into a short trade. And well, it is the euro dollar that I like, but you know, it's not always like that. Now, because our webinar is about price trends in second half of this year, we need to focus on the main subject. But honestly, second half is already here, guys, right? Because we are now trading in July. This is like some sort of mini holiday trading mode. But yet again, we still have some nice price movements, and we can, of course, profit from price action and price movements. So why not call it, let's say, holiday trading? Because of course from September we will have even more, and I really expect even more movement. But still, for a holiday trading season, I think it's good. Euro dollar. For euro dollar, inflation will be very important. But still we know that there is a sort of deterioration in inflation, and on the contrary side, Fed is having a policy of normalization of their monetary policy and their rate hikes. So definitely Fed normalization supports the dollar. My opinion, I mean, you know, it can change every month, but at this point, I see that euro dollar could drop in 1 to 3 months towards 1.09. This is my opinion, and I will show you, of course, chart because I cannot influence fundamental decisions. But what I'm really concerned of, what I really like to do, and you know that I do it each day, it is a technical analysis, right? So if this keep the same, what I said about the deterioration in inflation and normalization in Fed's policy, we should see a drop, okay, in next 1 to 3 months. First of all, when you go with some midterm projections, you always need to take big picture into account. Big picture for midterm projections is done on weekly time frame. So weekly time frame is something you should be focused on, and of course, weekly time frame is something that you should be paying attention to if you want to trade. If you want to trade with a, let's say, mid to long term trend. For a weekly chart, we see a big drop in euro dollar. This big drop started exactly at this point. Now, this is weekly candle, and it suggests 2014, 11th of May. Okay, so this was a big drop, and now we see some consolidation. Of course, this is longer term chart, but what it means is that we need also to find confluence, even if we trade or if we analyze midterm. From this perspective, trend lines are very important. Here we can see a perfect trend line, two-touch trend line, that makes an X cross with Camarilla monthly H4 pivot point. Now, guys, take a look at this X cross. What? Look at this. This is perfect. This is what I like to see. Okay? So let's do it like this, okay? And X cross, you see, it's almost perfect. Even if we put it like this, okay, you still see a possible rejection. Now add to rejection these sellers here. You see, sellers, all the way down to this point, we had sellers. What does it tell you? To me, and definitely tells me that this is the spot where euro dollar could reject. Okay, watch this. Monthly H4, X cross with this trend line. Okay, this is that pivot point here. So if this X cross holds, we should see a drop towards 0.990 levels, even I would dare to say quarterly H4 that has been broken. Now it's 1.096. On weekly time frame, we can also see that this quarterly H5 has already been broken to the upside and retested. So it's normal that market actually wants to retest these historical sellers. You know that I always watch historical sellers, and I always compare historical versus now moment perspective. In my trading, my analysis, that is very important. When I do intraday analysis, well, you know that I always take historical sellers into account. And I will show you dollar yen. You could have made really nice pips by trading the dollar yen on intraday time frame. But you could have also traded yesterday euro dollar. You see, that is historical versus now moment perspective. Why am I saying this? Because it doesn't matter if you use weekly charts, monthly charts, right? The point is that historical and now moment is always aligned in Forex market. That is how this market is functioning. If anyone tells you that it's not important, that is, I stand behind my words. That is a complete nonsense. It is important. And how important? Much important. Okay? So, from price perspective, this looks like it could reject from this point. Okay? I don't say that it wouldn't break, guys. Because you see, this is the zone here. Okay? This is the zone. So anywhere from this point towards, well, I can say this 1.16, it has a room to go up. But what I expect is that it rejects. In 1 to 3 months, I don't know the time frame because I don't have a crystal ball, but from technical perspective, in 1 to 3 months, we could see rejection towards 1.0960, provided that monetary policy in US stays the same and that there is a deterioration in inflation in Eurozone. Provided that we see fundamentals that will not change, I expect euro dollar to drop. Okay, first level to watch for will be 112.30. when it starts to drop. Okay, when it starts to drop, this is the first level to watch. Then it should retest monthly L3, monthly L4, and finally drop towards 1.960. From that perspective, I need to reassess my analysis, because then we will have inverted head and shoulders. Why? Because if we take a look at this picture here, okay, let me draw it correctly. If you see, this is left shoulder, this is head, and if it starts to drop, okay, if it starts to drop, we will also have our right shoulder there. You see, now it's also at resistance, okay, very close to resistance. So, but I still expect a possible retest of this X cross. Then left head, right shoulder possible, and we will see what will happen. But I really don't expect Eurodollar to move much above this region, because everything suggests historical buyers. Even in 2015 here also 2015 here, okay, all the way in 2015 we had sell on rallies on weekly time frame. So from that perspective, we can expect a possible rejection towards level that I mentioned. Now let's move to Euro GBP. First of all, UK election was not good for GBP, because there was a surprise. Theresa May got a Pyrrhic win, but definitely it was not good for her party. We already talked about this, and I still expect a range play on Euro GBP where we don't see any clear trend in next to 3 months. A range play is in between 0.8350 to 0.9050, and we might see, well, the average of 0.8650 in next 1 to 3 months. Okay, now let's open the Euro GBP chart. Okay, again, weekly time frame. Guys, consolidation on weekly time frame. Still very, very important that you see the consolidation here. What I'm telling you, this is that kind of consolidation. Even this level might be broken, but this level here gives me more resistance. Why? Because at this point we see multiple rejection from 0.9 to 0.950. So these are multiple rejections here, and I think that this pair will be trapped into this range in next 1 to 3 months. 0.8650 has the biggest confluence, and you can see the confluence. Okay, a lot of retests, a lot of rejections, and also quarterly H3, monthly H3 totally aligned. For me, this is the range, and as I say, I really expect range play on Euro GBP. I don't expect anything to be broken to the upside or to the downside in next 1 to 3 months. So range play on Euro GBP. Next thing to analyze is pound dollar. Okay, pound dollar, again, UK election was not good for the GBP. Now we have two possible outcomes: rate hike, no rate hike, right? Because Mr. Carney hinted that they might see that BOE might do a rate hike. And you saw that, because pound dollar spiked heavily on that announcement. So what I might say is, okay, so what I might say is that we could possibly see two outcomes: with rate hike or no rate hike. If we see a rate hike, well, 1.35 possible. No rate hike, 1.25. Now, if we open pound dollar chart, this is weekly. Let's zoom into daily. This is daily chart, guys. And this is what happens on daily time frame. A complete close of this retail gap, and the pound dollar still goes heavily to the upside on daily chart. But now we have a cluster of resistance here. You see, this is resistance, but also we have resistance here. Okay, This is order block. This is a high. This is swing high. These are order blocks here. So this region, 30.50 to 31.20 is resistance. Where can I see the break of resistance? Any hint of a possible rate hike, okay, might spur another rally. Well, then you need to look weekly. Weekly suggests possible range of 33.20 towards, okay, towards, as I said, 35 here, okay, 35.30. But only if we see a rate hike or something that suggests rate hike. If we see that there is no rate hike or that BOE will not do anything, we might see a drop towards 1.25. But when to look for that possible drop? Of course, that drop can happen only if we see a clear daily close below this cluster of support. Okay, this is important. Quarterly H3, monthly L4. Well, quarterly is still higher time frame from monthly, right? So monthly L4 was resistance, now it's support. But quarterly H3 is the main range play because price tends to, when you trade with Camarilla, when you analyze Camarilla, price tends to be trapped in between L3 and H3. For you intraday traders, this is maybe not important, right? Because on intraday time frames, we look for daily Camarilla levels, right? For 4 hours, we look for weekly. But well, we are now on daily time frame, and we need to watch for monthly and quarterly. For this, let's say, strength, quarterly is still stronger than monthly. So I think that if the price closes below 27.30, 27.15 on daily time frame, we could see a gradual grind towards 25.80, let's say 25.00, because this would be a retest of psychological support and a breakout of these inverted head and shoulders here at this spot, okay? So pay attention to that. Still, it needs to close below 27.30 in order to possibly proceed further down. Until then, on higher time frames, pound dollar is still bullish. And at this point, it's close to its resistance. If it gets there, we might see a sell because 30.50 is where sellers are. Coupled with monthly H4, this is the spot to look for possible short trades. 30.50, 30.55. Pay attention to that. This webinar will be uploaded, but don't forget to mark these levels because price might get towards this level. Okay, pay attention to that. Next thing is dollar yen. Of course, on dollar yen, BOJ policy will be very important, but still, contrary to BOJ policy, we still have Fed normalization. What I think is possible range play in between 110.00 and 115.00 in next 3 months. So dollar yen, you see daily chart on dollar yen, very, very, very clear, very bullish, it looks like. But again, don't forget that this is higher time frame trading. Now we are exactly at resistance. And if you watched my analysis today, you could have made some nice money. Again, guys, this is purely Camarilla MACD analysis. Camarilla MACD, very, very accurate. Something that has given me a lot of pips also in the past. And here, our MACD indicator, this is divergence. And what happened? Rejection from 112.60. If you actually traded this, well, you could have made some nice pips after I made the analysis. Okay, this is intraday. So you see, I mean, even on higher time frames here, you can see that daily it was at resistance. So no coincidence that it actually rejected. Also, H4 means H4 resistance. It's Camarilla breakout level. So this tends to be the strongest resistance before breakout. Coupled with trend line, it makes an X cross. If you don't know what an X cross is, please refer to price action trading school. Okay, so X cross rejection, and possibly, as I say, some range play. Okay, even on daily chart we might see something, but on weekly chart, let's remove these lines. I expect possible, well, let's say 115. Okay, because 115 is where sellers are here. Okay, I will zoom in. These are sellers. A lot of sellers. Watch these guys. A lot of sellers in the history. 115. Okay, let's round it up. It's 115. It's a round number. Banks like to use these now rounded numbers. And of course, 110. That is also now a psychological rounded number support. A lot of buyers from this region. So this could be a range play now. Okay, in between 110 and 115. Of course, in next couple of months. And finally, guys, we need to mention cryptocurrencies. Okay, I will do a quick analysis on Bitcoin versus euro dollar. Watch this, guys. This is weekly time frame. This is daily time frame. On daily time frame, we see a consolidation. This is a pure consolidation with a clear trend line that we actually have two trend lines here. What is important to say is that there is no fundamental backup for cryptocurrencies. This trading can be purely technical. So we need to watch for main things of price action such as trend lines, pivot points, Camarilla channels, break of trend lines, and so on. When this trend line breaks, I expect Bitcoin versus dollar to drop. Okay, so watch for 2307 break of possible trend line X cross here. It can go way down to 1970. Okay, retest of this region where it will be in up rising channel. The chart is not showing. Sorry, guys, this was paused. Okay, here. Now you can see the chart. Basics, Bitcoin versus dollar, purely technical. You see, this is a trend line. This is trend line. Break of this trend line suggests further drop towards this line. Until then, Bitcoin can be supported and we can see buy on dips. No historical data because this is the historical maximum that this cryptocurrency has, and Bitcoin is the most popular cryptocurrency at this point. Ethereum also very popular cryptocurrency. We saw a big drop, a big spike. Well, that might happen always in these kind of markets. This can be very volatile. But what is important to say is that, okay, we have our Camarilla. We see a possible retracement in Ethereum. So what I expect is we don't have historical data. Again, I need to zoom into these lower time frames, but it's still daily time frame. Watch for possible make it or break it, guys, here. Again, very similar to Bitcoin. Very technical. If it goes here, it might drop towards this trend line. Okay. Now at this point, we see a rejection. This is a steep trend line. And if it breaks this X cross of quarterly H5, Ethereum versus dollar could go up. Okay, so you see, this could be a break it, or make it maybe lower. Litecoin versus dollar, also Litecoin, something that we need to take a look at. A lot of gaps here, but yet again, it's moving in a sort of technical patterns because we see a clear trend line. What I would say here, no historical data. From this perspective, judging by Camarilla on 60-40, it could be a rejection that would be a first step towards a big retracement. If monthly H3 drop, if Litecoin drops below monthly H3 level here, I expect a possible retest because it will be trapped here between L3 and H3. Okay? And finally, Ripple. Ripple is also very interesting. It's very popular. And here on Ripple, we see a clear range play with a possible bullish pennant here. Okay? A very technical. Cryptocurrencies are very technical. I mean, for me, this is pretty much simple analysis. Also very clear here, very clear levels here. Of course, due to lack of historical data, we cannot see quarterly levels, but we can see clearly daily levels. So range play between M3 and this flag here. If it drops according to the poll and projection, it suggests a drop towards monthly L3 and quarterly H5. So purely technical. Cryptocurrencies look purely technical to me at this point. So I hope, guys, that this helped. We will continue providing you with, of course, daily analysis, but this is just an outlook for possible investors or traders who are watching short, longer term, or let's say mid-term. Chris will continue. If you have any questions, please do ask. Thanks for listening. Wish you a great rest of the week and talk to you soon.
Thank you so much, Nenad. That's great stuff. Let me check if everyone can hear me and if my microphone is working. In the meantime, let me share also with you my screen. But first of all, just a sound check there as we get the systems going. Very interesting to take a look at, indeed, some longer charts. Of course, we do normally take a look at intraday, 4-hour, daily charts in the sessions on Monday, Tuesday, Wednesday, Thursday. But this time we're going to take a look at the next 6 months. Nenad already discussed some of these fundamentals. I will be focusing, therefore, a bit more on technicals as well, just as Nenad, my favorite tool. But yeah, fundamentals, of course, in such a long time frame, definitely an important part of it because of the fact that central banks will make their choices. Will the Fed continue with interest rates? How will the Eurozone react? How the the U.S. economic statistics looking like? You know, those are, of course, obviously very important for a time frame like 6 months. But still, we can read a lot in basically when looking at the charts. So let me show you my screen. There we go. Now you should be seeing a screen just to check yes, no, sound, and the screen. We're looking at the euro-dollar daily chart at this moment. Hopefully you see that. And basically what I am looking at with the break of 113, I think is significant. I do think that I agree with Nenad that it is running into resistance. But considering the fact that price is breaking with such momentum now to the upside, I think that after a bit of consolidation, more upside is possible. I know that this may be perhaps contrarian at this moment because true, the euro dollar is in a downtrend. It has been ever since this breaking spot more than 3 years ago already. But this particular drop didn't go too far, and we're seeing a steady retracement or upside. I was personally seeing this as a pullback for more downside. But the strength of the bullish momentum, I am leaning towards the fact that the euro dollar could push higher, but not immediately. I do agree with Nenad that this is a strong resistance zone, and anywhere with this trend line, and basically these tops here, anywhere around 115 up to 117-ish, is a major resistance zone. I totally agree with that. So I wouldn't be surprised, basically, if after this bullish run-up, price makes a consolidation and kind of retraces back to a fib. Which fib? I think that I was thinking that this is an ABC, but considering the length and the push of wave C, it doesn't seem likely to me anymore. I think that this is kind of, you know, unlikely at this moment, and rather I think the more likely scenario is that this could be a wave 1, 2, 3. That is a dramatic development, actually, a dramatic change, because that really structurally changes the whole outlook of the dollar, especially specifically the euro dollar that was bearish for years and years and years. If this is the case, if this is indeed a 1, 2, 3, the whole structure changes from bearish to bullish, and that is quite dramatic, to be honest. And that's not something I expected. That is not something that I thought would happen now. I did think that it would happen one day, but I thought it would go actually with one more lower low, and then we would see a 5 wave up again. I thought price would at least test parity. That honestly was my opinion. Well, price is not showing that, at least not at the moment. It is showing strong bullish momentum, and I don't think that this momentum is going to, go away. I do think, considering the fact that price is now above these targets, especially if it reaches this target, that's a decent size move. What happened, though, I think, is we could see a correction of the wave 4, or we might even see a 5-wave finish, and we might see an ABC for wave 2. So there are 2 fibs I think we can put on the euro dollar, and that is basically from this bottom and from this bottom. Now, where is the top? And that's something we don't know at this moment. Actually, this momentum is still not finished. We have a higher high today, yesterday, and the day before, and the day before. So obviously, we don't know where this is going to stop. And depending on this weekly candle, next week we could have another higher high. But we could estimate, as Nenad already indicated, that 115 to 117 could be the zone where price makes this retracement, right? So that is something we have to see. If we assume that price will stop at 115.50, just for the fun of it, it's just an assumption. We don't know yet. We'll find out as we go along. Then I would put the fib from this bottom and this bottom to the same top. And basically looking for price to either retrace to a deeper fib. If it is retracing the entire swing, it could go back to the 50 or 61 or 78.6 fib. And as Nenad said, it could go back to even 108 or 109 just as a retracement. Or it could be a shallower fib, and it could be like 111.15 as it kind of makes a wave 4 like this and then breaks the upside. So a correction or an ABC and then up. I'm not sure how long this is going to take. It might be that before all of this happens, it could be already 2018. These things take time. So that is something that whether it will, this exact pattern will happen this year, it might be beginning of next year as well. But this is what I'm expecting. We can dive into this part to see if this is rather a 5-wave finishing or is this a wave 3. Let's take a look. Let me take a look, remove these fibs. But basically 115, 117, very important zone for price to stop. For the moment, I think it has space and has momentum, especially if this week's candle closes anything with the close and the high as it is, then next week it should kind of pierce through and go into that zone of 115, above 115, and let's see how far it can push. But there is a chance that zone will be respected, that there is a bounce, and price might make that correction down again, and then I'm expecting more upside, in fact. From a time perspective on the monthly chart, this would be the 6th candle. So there's a decent probability, as you can see in my view, that this actually is over. Downtrend is over. So let's see. From this perspective, this is looking like a wave 3 because of the oscillator. This is looking like a wave 4. This is a wave 1, 2 probably, and this is maybe an internal wave 1, 2, 3, 4, 5. It looks like we're finishing a wave 3, a wave 5 of 3, I should say, on the daily chart, which means we have one more wave 4, and then one more wave 5, and then we might actually complete a wave 1, and then see an ABC back down for wave 2. So let's see. For the moment, I think that probably should count on shallower fibs, like for instance, this one, and look for bounces when this does finish at the 23.6 and the 38.2 fib. Only if it really falls a lot would I be looking for a deeper target for this moment. That I think is the best, maybe more conservative approach for trading it. For the moment, though, bullish retracements this week, next week, upside, and then there could be a wave 4 and maybe even one more upside before we get a bigger correction. All right, let's take a look at the 4-hour charts. Yeah, that's a bit too low, but So we'll be keeping an eye on the 23.6, for instance. What could happen is that it pushes to 115.50, goes back to the 23.6 fib, then moves up to 117, and then we get a bigger correction, and then upside again. So regarding other pairs, let's take a look. Sorry. I think dollar yen is getting into a range zone as well. So I wouldn't be surprised to see price test this bottom like this, then bounce up again. And that's about it for this year, I think. Not much. I think it's going to be a heartbeat. I think it's going to stay in this range. Ultimately, though, if it does break this triangle, I think the break will be to the upside. But that's just my thing at this moment, at least. You never know with these things, with triangles, they can really break to both sides. So we got to keep an eye on both levels, in fact. Pound dollar, I agree mostly with everything with Nenad is saying. In fact, I think that it is bullish at this moment. And depending on the central bank's decisions, this could accelerate to 135. Indeed, I think that that is a decent probability. Indeed. For instance, let's take a look. Put a fib maybe from here to here. 133, 136, for instance, those are fib targets. Let's take a look at gold. Gold rejected at the resistance trend lines I had. I was saying it has to break above the weekly pivot point for me to really be interested in upside. Then it would be trading and breaking this particular trend line. It hasn't done that yet. From a daily perspective, which is really what we're interested in here, I think that this is a 5-wave up and this is an ABC correction. The C, I don't think is finished as yet, considering the fact that price is still below the orange trend line. And I think there's a good chance that price will make a double bottom here at the 50 fib or even test the lower fibs before turning around and making an upside again. So I'm bullish on gold, but whether that bullishness will happen soon, maybe not. There could be some bearishness first, and that might take some time. But eventually, yes, I think that these fibs are going to provide support, and I would expect an extended upside to at least the minus 272 target, and who knows how much further than that. It depends really if this is an ABC or a 1, 2, 3. And at this moment, I think a 1, 2, 3 is more likely, but both are possible. Morton is referring to the pound New Zealand. Let's take a look at that. Let me refresh this template. All right. Basically, well, strong downtrend at this moment. We had a sturdy retracement, but that got very massively rejected. And boy, about a 7,500 pip move, 8,500 pip move in almost 2 years. After a pretty sizable upside as well, we should note. From my perspective, on a weekly chart, this is looking like a wave 3. On a daily chart, you might see that even better. This is a wave 3. So I wouldn't be surprised at this moment if this is a wave 1, 2, 3, 4, and we're in a 5, for instance. And obviously waves could be different, but that's just my best guess at this moment. And price, respecting the 38.2 fib, price should not really go much above it. The 50 probably be max. And taking a look at the reaction from the 38, it's pretty impulsive. This could be a wave 5, but within the wave 5, it could be a wave 1 and 2. So let me get rid of these Admiral pivot points just for a minute. I love the Admiral pivots, but for this chart, I'm looking at a bit more long-term perspectives. So I would like to remove this particular indicator for now, just for a second. And what I wouldn't be surprised, personally, if it is retracing this fib, and I wouldn't be surprised if price could stop at any of these fibs, in fact. But I think the most likely fibs is probably the 50. You see there is a moving average, and just above it, the Admiral Keltner. Admiral Keltner is a special indicator, part of MetaTrader 4 Supreme Edition. And if you're interested in that, by the way, you can go to admiralmarkets.com, go to platforms, click on MT4 Supreme Edition, and here you'll find a free download, and you'll find also some info about it. Mini terminal, trade terminal, tick chart trader, the way to get real-time news, stay connected, and of course, most of you probably were interested in the indicator package with a lot of different materials there, or sorry, indicators. So I think, therefore, 50 fib, pretty good level to think about. But of course, a lot of info we'll get from these daily candles. I wouldn't be surprised that if there's some hook back like this, and there would be an ABC zigzag within this wave 2. So I would not be that interested. If price keeps pushing like this and hits the 50 fib, this particular sell is okay. It's not the best in the world. The best in the world would be if it makes an ABC zigzag, and then the next, push up, there's a move to the 61.8, and then we complete this ABC kind of formation. Then this particular fib is interesting. Or if it does this. Sorry, the drawing tool is working a bit strange, but you get the point. If it hits the 38, then makes a retracement and it goes up to the 50. So I'm keeping an eye on the daily candles. This is only the second day not breaking for a low. Very early, but considering the aggressiveness of these daily candles, I think it is a start of the retracement. Therefore, I do think that 5 to 6 days will not break this low. We'll find out by next week. This could be the hook back, and I think that there could be something like this and then this. Or maybe even deeper, but you get my point. The invalidation level of that is really this top. I mean, if it breaks above the top, then this is not a wave 1, 2. I would be surprised if that happens, but that happens. Sometimes you get surprised. Invalidation levels sometimes get hit. That's part of trading. And that's my validation level right there. So that's the pound New Zealand. Does anyone else have particular favorite in mind? I mean, I really don't mind. If you have something in mind, let me know. We can take a look at that. I mean, ultimately, I think yen is going to be in a range. I think that dollar is honestly looking a bit weak at this moment, but I guess everyone can see that. But let's see how far it continues with the euro and the pound. And then there will be some retracement indeed. Yen looks rangy, so I think that the other yen crosses kind of will probably just flow with what the other side wants to do. So euro yen could kind of follow the euro dollar in a way. So that's about it on those. Silver, yeah, sure, we can take a look at that. I don't look at silver as much as I do gold, so I might need to find my bearings for a minute, but then I should be back in the picture. Let's see. All right. Of course, silver, in many ways, the formation does look very similar to gold. There are some differences, though, and few of those differences is just the fact that it retraces so deeply on silver. The gold retracement has not gone that strong, that far. That's one of the major differences. Excuse me. Otherwise, I think the structure is roughly similar. Of course, another factor is the fact that this correction down is also not as strong on gold. You can see here, this ABC zigzag, not going that deep. The 50 fib was the turning spot. If we put a fib from here to here, I guess, I'm not sure if that's the same fib actually. November 2016. Yeah, it is actually. So you see, it went all the way down. Silver went all the way down to the 78.6 fib. Gold hardly reached the 50. So that's a pretty substantial retracement difference. 88.6 fib almost. However, yes, this could be, depends. Is this the correction, or is this the correction, or is this part of the uptrend and this is a correction for uptrend? Certainly is looking a bit weaker than gold, the upside at this moment. Ultimately, though, I think it's closer to support, and I think therefore the upside has better papers. How much upside? I think it might be a bit weaker than gold, as we've seen. But for the moment, a bounce up to the resistance trend line, for instance, could be something that is not exaggerated. So third candle today that didn't break for a lower low. I think that there could be, would be nice to have some solid bullish candle like this, and then a retracement. 5 to 6 candles not breaking this low, and I think that we could see some kind of correction like this occur. And we could see some upside, some hook back and upside. It is, I think, not the easiest chart to review at this moment. I think this one is, yeah, it's quite a tough one, I think, considering the fact that the retracements have gone so deep on silver. So you can see such a bearish pressure. Yet you see also the attempt to recover a bit to the upside. So I think for the moment, consider the fact that support is so close by that the bounce is more likely. And therefore, looking for a bit of a hook back next week, perhaps 5 to 6 candles not breaking this low like this, we might see that bounce up to the resistance. All right, OddCAD, let's take a look at that. Very choppy. And that's the New Zealand CAD too, by the way. Yeah, both showing more or less the same kind of consolidation. These currency pairs are in a range, no doubt in a range, and I've been in a range for a substantial part. I don't know if New Zealand CAD has been in a range as long as the odd CAD by heart, but yeah, roughly going into something like 6 years already now. Of course, with its ups and downs, well, actually maybe even longer, depending on how you look at this chart, but specifically this zone then. And this zone very clearly, of course, price is kind of oscillating around this moving average. No real winner at this point. And this is good for range trading. If you like range trading, ARCAD might be a good one to choose because, yeah, it's definitely in that kind of environment. Now we do have higher lows, flat top so far, flat zone of resistance. So let's draw this trend line here. And it looks like price is trying to break through. Hang on, let me correct this. It's trying to break through this particular support. It failed to do that now, but the next time it might, work out. There could be some momentum here to the downside. And there could be a correction like this perhaps, down to the minus 272 target, maybe the minus 61.8 target, and I wouldn't be surprised then to see a bounce again back to the upside, right, as it uses the support in the trend line for bounce back up. So whether this breakout will work, I'm not sure. It might just go back to the pivot point and then find a new rejection like that, for instance. If it does a break above the weekly pivot point, then it might just, this is pretty choppy, so it might oscillate back and forth like this. As you can see, it's difficult to break away from this moving average. So if it does break to the downside, it doesn't have to go too far before it snaps back to this equilibrium point in a way on this daily chart. So that's something to be cautious of with breakouts in this type of environment. Trading the range itself, trying to find the support and resistance levels that look interesting for a bounce within this range could be maybe the best. On lower time frames, perhaps Weekly chart, though, I think there could be a bounce anywhere in this zone. Back up. All right, let's see. Anything else? Anything else? Or any follow-up questions? What I just said about AUD-CAD or Pound New Zealand or silver, gold, euro dollar, pound dollar, dollar yen. Anything you would like to take a look? Regarding oil price, we can take a quick look. Sorry. Let me count the number of candles that haven't broken the low. 16. This is a retracement, but it's quite mild. I'm looking at two scenarios, and I think they're about equal, to be honest. I don't think there's much difference. There's one scenario where this is just going to be a downtrend here, and it's going to be a new lower low. We basically had a correction. Price broke through support. So this could be correction, downside. That simple. Is this a great breakout candle? No, not on the monthly. On the weekly, looks a bit better. Here we have a break, pullback, break, pullback, continue. Ultimately, this though is starting to look a bit choppy too. So the break is not looking that great as yet. If this month, well, we only have a few days left, if next week, this is a good monthly candle, could be looking better for continuation. Otherwise, this could be an expanded correction. So if we put a fib from here to here, right, 50 fib. So we have to see how price responds to the 50 fib. Is it close near the low? Is it close far away from it or here? That will give us some information about that. Will the weekly candle this week, if it closes somewhere at the Keltner, there's a good chance of a breakthrough. If it's bullish, then the monthly candle would not look good as well, for bearishness at least. Ultimately, though, in the bigger picture, this is strong downside and this is correction. So whether it breaks to the downside now or whether it does maybe later on, I still think that this is choppy, and I therefore, hence, for the moment, prefer to put a fib on this particular swing high, and I think that the 38.2 or the 50 fibs could be strong resistance levels, and I think there is a chance that we might break this bottom for a new lower low. It might be just $1. It might be even a cent, or it might be double bottom even. But it's possible that there could be a serious challenge of the bottom again. Will it break? I don't know. It doesn't have to. That's a bit difficult to say. It's already quite low, this price, but it's possible, and it could go beyond that. Ultimately, I do think that this is just a bearish structure. From a technical point of view, I know maybe difficult to believe that oil can go that far down, but from a technical point of view, it looks corrective. Hence, I think that one more serious downside is possible and likely, and will challenge the bottom. Maybe break the bottom, but at least challenge it. And I'm not sure if it will break, but it will get close to the 28 then, I think. Let's see if that's true. That's my view at this moment. Euro New Zealand. Let me close the mini terminal so we have a bit more space with these long-term charts. Dollar yen, basically I expect a range. I expect price to, I showed it. I can show it again after this one. No problem. Sorry, it seems to be a bit stuck at this moment. So let me quickly close it. I'll be back up in a second. But in any case, we'll take a look at the Euro New Zealand. If you're curious, there's also the mini chart available with MT4. There's a video here. And once again, a free download, and you can test it. So that's part of MetaTrader 4 Supreme Edition. Also, by the way, just as I'm rebooting here quickly, there's a lot of webinars coming up. I wanted to say next week we got Monday, Tuesday, Wednesday, Thursday yet again. A lot of live trading and a lot of analysis, etc. With our session next week, we'll be taking a look how to tackle trading psychology, by the way. It's called Learn Practical Methods to Transcend Fear When Trading. Oh. All right, we're back with the Euro New Zealand monthly chart. I think that it does look a bit different than the pound New Zealand. Ultimately, though, it could be seen as a 5 wave. It's not as nice as the Euro New Zealand, pound New Zealand, but it could be okay. Also, the difference is that the pound New Zealand broke the bottom, the Euro New Zealand didn't. So we've seen more pound weakness than euro weakness with against New Zealand. We see that this is a pretty sturdy momentum. So one particular idea we need to keep an eye on is a zigzag like this. That would mean a lot of euro strength, and that's difficult to kind of fit together with fundamentals almost. Technically, though, the euro New Zealand looks stronger than the pound New Zealand to me. Bounce at the 88.6 fib. And momentum here, and this is pretty choppy. So whereas pound New Zealand, I was thinking that this is a wave 1 and wave 2, the Euro New Zealand, I would not be leaning towards that particular structure. And I think that considering this break, and again momentum in the market here, with 5 waves, and price going back to, and strongly bouncing at these fibs, which could be a wave 2, so we could be looking at a wave 1, wave 2 of a bigger A, B, 1 or 1, 2, and this could be 3 or C. Well, that could be quite compelling for upside. So if we have engulfing twins at the end of this week like this, next week, small bit of retracement would be ideal. Could be good to look for longs. Today's already end of Thursday, so I'm not sure if this is the right moment to trade it. But I think the weekly chart, the weekly candle makes sense. Wait for a bit of retracement on this Euro New Zealand. Right? This week maybe ends up somewhere here, and then a bit of retracement like this and up. That's my view. Well, for this week. I know that's maybe too short term for this video, this webinar and video later on, but ultimately looks like break, pullback, continuation potential here on the Euro New Zealand. Yeah, so let's see. That will be interesting. If, of course, price shows bearish candlestick patterns as it's approaching double top or reaching the target, I'll have to update my analysis, and perhaps this is just an ABC zigzag that goes up to these targets and then it goes back down like this. We have to be aware of that. That's why any conservative targets are still in this zone. There's no guarantee that a break above that will happen, and it could just stay stuck in between support and resistance. That could happen with the Euro New Zealand as well. But for the moment, this does look like a pullback, break, pullback continuation, at least to this zone, and then we'll have to see. Dollar yen, basically, I personally expect a move down to test this bottom, and I expect a triangle like this. And I think price will stay in this bottom, in this triangle like this. And then I think it will break to the upside or to the downside. Yes, absolutely, Andy. Any follow-up questions, feel free to email us. No problem. Absolutely. So that's about it from my side. I mean, if you have anything specific, Andy or anyone else, you can still ask a question now if you want, or through the email. That's no problem. But I think that will slowly but surely wrap up today's webinar. So we went through some pairs, not all of them, but I think a decent range. Not sure, I don't remember if Nenad went through stock indices as well, but for the moment, yeah, they're bullish. Higher highs, higher lows, small candles, but still pushing. Target has been reached though. Let's see if this minus 272 target could create something of a retracement to test perhaps these bottoms again, these tops I should say. But we'll find out this month a bit, I guess, or next month probably, this doji does not mean much, I think. It's just indecision. If next month will be bearish, I think that that could start a correction downwards, right? But next month would have to be bearish. July, I'm talking about July. Whether it happen, I don't know. I think that is at this 272 target, but let's see. It has risen for a substantial part of the time, but trends are strong. So ultimately, there's going to be some correction. I wouldn't be surprised if it's next month, if we see a bearish candle next month. But I don't want to be too soon with reversals, especially in stock indices. They can push a lot longer, and I've been therefore very careful about suggesting that there could be a reversal, and haven't done that as far as I remember. Now, because it's reached the target, I am kind of curious how it's going to respond to that. But we'll find out soon. I think if it's a breaks this month high next month, there might not be that at all. Ultimately, I think the best one, if there is a bearish candle next month, that could be the best kind of indication. So let's see if that happens. Stocks pushing and pushing. All right, folks, that's it for today. Thanks for joining. Great to see you all here. Hope to see you again next week, and great trading as always. See you soon.